We detected an unusual trade worth $5.1 million on ARM Holdings stock, ticker symbol ARM. And what's also very unusual about this is that ARM Holdings reports earnings in a few weeks on February 5th. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying ARM before earnings or bearish and selling ARM before earnings. Because as we all know, the rich have more access to information, including leaked insider information, such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into our analysis. Now, as you can see here from the charts, ARM is currently trading at this very strong resistance, where it could never quite trade up even higher multiple times in the past, where price kept on getting rejected. And so based on the technical analysis pattern, there is a chance that we will break down lower. And so keep in mind of this higher risk as we dive into the analysis of what this wealthy investor is doing. Now, as we can see here on the options time and sales tape, we had multiple trades for these September 19 options at the 190 strike calls over here as well, all being traded at about the same time, 10 o'clock in the morning, and being traded for the same price, $1,500 per call option. Keep in mind, we need to multiply this price by 100 since each option represents 100 shares of stock. And so when we take a deeper look at the option chain for these unusual options that expire September 19, we can see the total number of contracts that were being traded for these 190 strike calls, about 3,400 contracts at the volume today. And we know these were clearly new opening trades because the open interest is only one. It is not possible to close out of these trades if there was only one open interest. And so based on our analysis, you can see here we are in the same position. POS stands for position and green means buy. And so when we calculate the estimated trade costs of 3,400 contracts times $1,500 for each of these call options, we get an estimated trade cost of $5.1 million. But keep in mind, earnings is coming up. And so this is a higher risk trade in comparison to the trades that we share on our website. And so if you want access to better trade ideas with stronger data analysis and lower risk with a higher probability of profit, then we'll put a link to our website up here, because not all of these unusual trades will be profitable. Even this one might be a loss. But as long as we diversify with higher quality stocks picks based on this type of data analysis, then we can become more profitable in the long term. So go to our website if you want more stocks wealthy investors are trading for your portfolio diversification. And so even though this is a higher risk trade, we still traded it, buying these for also the 1,500 each. And when we analyze this trade, we can see here that the risk profile profit loss graph here, where the x-axis is represented here and the y-axis is the profit loss. Note the zero break-even line here. And so when the lines are below that, it is a negative loss. If it is above that, it is a positive gain, because this is a long bullish trade, and we can confirm it here on the Greeks. We have a positive delta trade. But be aware of the negative theta risk here of -6 per contract. This trade decays in value through time, and that is why the purple line, which represents the current date, drops down to the blue line, which represents the expiration date, as time goes on below zero. So it will become a loss, and that is why the stock needs to move a lot higher, all the way to the break-even point here at expiration, which is about $204 per share for this trade to be profitable, even though the call options have a strike price of 190. So be aware of the risk on this trade, and that is why we use position sizing to manage our risk, because we put most of our capital in the trades that have a higher chance of profit, that have a lower risk in comparison to this one here, because we have earnings coming up. And so if you are interested in the higher chance of profit trades, and our option strategies that reduce risk while increasing profit potential, then go to our website. We'll put a link at the top here. Let us know in the comments below. Do you think ARM will go up after earnings, or do you think it will crash down? As usual, please hit the like button, subscribe if you haven't. Take care and have a wonderful day.